Trader Ron, how you doing? How's the beautiful winter we're having going? Good? Doing good. Around Happy New Year, guys. Our second summer. Can't complain, I tell you. We're probably going to get some cold weather and then get faked out with some severe colds or something, but we'll see. Anyway, guys, welcome. Going to talk a little bit to get the new year underway. I sent a request out at the end of last year about what you guys wanted to hear in webinars and stuff, and got a lot of replies saying confirmation for entry. And it's a very interesting subject because in the whole big realm, the big sort of universe of your trading, confirmation is something that you'll probably, from a technical perspective, play with or use or not use a lot and change a lot, because as naturally as traders, what we do is usually use something till it doesn't work, and then when it does not work, g'day Boyke, we try something else, and a lot of the time it's confirmation, because we believe that's where the problem is. So let's take a look and get some ideas about what we're talking about here. Okay, and I think we're going to use this Aussie dollar as an example for a couple of reasons that will become obvious. Now, hands up in the room the people who do not use confirmation. Of any sort to enter trades. Kiwi kid? You're not using any form of confirmation whatsoever? Hulk? The Hulkster? Right. Personally, I went through a big phase of not really using any confirmation either, and had reasonable success not using confirmation, because if you understand the fractal nature of the market, when things are swinging, for example, if I just draw on this chart sort of what's been happening on the Aussie, if you pick zones such as role reversal mixed with central pivots and all that sort of stuff, you can generally get, and you put a semi-healthy stop on it, as long as you've got direction right for the day, you'll be fine. Down, down. Now, as a novice trader, doing something like that and just learning your trade, I think, is fine. Oh, good night, Miss Pips. And but what happens, right, is there will always come a time when you'll get major market reversals. For example, a V reversal in the market, where this is normal price action in a market. Things, no matter what time frame, they like to try and step their way down. But sometimes, if they change trend, they sort of step their way up, right? But sometimes you'll get this sort of deal where if you're shorting, trying to use without confirmation, you're going to get absolutely burnt. You guys hear me okay? Are we all good? And, okay, checking. Whilst I was a fan of not waiting for confirmation, now the reason why, let me explain, the reason why I went through a big phase of not using confirmation was I found that sometimes waiting for confirmation kept you out of getting in good trades, because you'll have a trade that comes up to an area that you'd like to short from. For example, London market opens, it just goes from that point without and has zero confirmation. It just literally turns on a dime and off it goes. So that was one of the things that led me not to use confirmation for the longest time. But then after having a few bad experiences by not using confirmation, which, let's face it, after a while does play a little bit with your, mind, the psychology side of things. I decided that, if you're going to outlast this game and you're going to live in it for a long, long time, this trading world, the idea is to have a strong defensive game, right? And so what I decided is accept that you will miss some trades because they don't give any confirmation, but accept also that by waiting for confirmation will keep you out of some losers. Okay, for example, if we go back to that V reversal pattern, if you'd planned, a short at the 382 fib, say, and that failed, and the 50% fail, and the 618 fail, if you're waiting for confirmation, you're gonna come out of that day with no losses. Okay? No confirmation, and you'll come out of that day with 3 losers. So, waiting for confirmation is a conservative measure in trading. Oh, yeah, but sort of 100 pips loss in a day by not waiting for confirmations, Chris, will play with your mind after a while, especially if it happens the next day. But, rule of thumb, we're always using stops. Okay? So, using confirmation is good in terms of it's a conservative measure, and anything conservative with trading, guys, should be seen as a good thing. Okay? If you think trading along like a rock star, a partying rock star is what trading's all about, you're in the wrong world. Yes, Chris. Okay? So, those of you who wait for confirmation in your trades, what tools are you using? Out of your trading toolbox, what are you calling on? Okay. Price action, bit of RSI, CCI. Okay, good. Reversal patterns, good. Okay, good. That is a question I'll get, what shall I be using? What do you use? I'm going to use it. That's the important thing, is you're using something and you're using it in a manner that you're happy with. Okay, so it's good that you're waiting for some confirmation. Okay, very, very good. Now, next question for you guys. If I fibbed up this, let me actually do it. I was just going to draw a pretty line, but I'll actually put a fib tool on there. 15-minute trending up, and let's say we got to pull back to, let's say this zone here, which is sort of the 50% fib and an area of previous highs and lows in that yellow box there. If we all did some long-term analysis for the day and stuff, and we looked at that yellow box there, and we decided that was our little zone that this was going to get long, and what time frame would you be waiting for your confirmation? Three or 5 minutes? Okay, good. I'm happy with 3 to 5 minutes. Okay, I'm pretty good with that. I just wanted to check we're all in the same ballpark. And then Kurt comes out with a 1 minute MACD. You must be Wayne McDonald's best friend, Trader Kurt. Okay, next question regarding confirmation. Okay, is we're going to mix it up a little bit. If I go to the hourly chart, let's make this an hourly chart real quick. Okay. And I put a fib in this direction, and I said to you that right all in this area here, we've got roll reversal, a weekly central pivot point, and various other bits and pieces. We should short this market, and we agreed to short it based on what I have drawn here, somewhere in this red box. What confirmation would you be waiting for on this chart? KTT retest doesn't tell me confirmation, I guess. No, Ron, I'm actually happy with the 15-minute answer. Why would that be? Before, on the long side, I'll just draw in blue, we had that lined up, right? We had a long like that at support to long it. And we had a 3-minute change of trend. But up here, where we've got like an entire week's worth of shorting, we've sort of got a 15 minute. But why would I be wanting to see the 15-minute up here and not a 3-minute and a 3-minute down here? It's sort of, see, shorter term, you know, if you think about the fractals, right? We have had downside for like a good week and a couple of days of upside. Okay? There is a lot more people buying from here, and they had a lot more buyers join the party here. Obviously, Asia is open, and a lot more people have joined the party here. So currently, short term, there's a lot more people buying than selling this. So when you think about it, if you pull back to here and have a shot at the long, thinking maybe a little high double top or something, there is, the path to least resistance is there's just a lot more people buying right now. So your next shot might be to buy here. But because there's probably, short term, a lot more buyers than sellers, you don't need as much confirmation to get you in. The first signs, like a 3-minute change of trend pattern, that we're heading up, bang, off you go. Okay? However, where we are right now, due to the fact that people have been buying this for the last few days, if we're going to roll over here and potentially... No, it's not. It's definitely not too slow. See, what's going to happen is in this area here, it's going to get a lot of support still. Okay? Even, yeah, exactly. Chris mentions the 21 EMA buy zone down here. So what's going to happen is if we come down, 15 minutes is going to change trend. It's going to come up here. It's going to give us some sort of pattern that we like. I'll throw some up in a minute as examples. And we're going to do something like this. Okay? Now by then, our 21 EMA is going to have crept up here and joined this little creep up here because it's dynamic. And people are going to try and long off that. And we're going to come back up here, and then we're going to come down. Okay? Now, that whole process of a 15-minute change of trend, at least, if you think about it from a time perspective, for example, these are hourly candles, guys, but this here is essentially, that's a 15-minute change of trend over here and over here. They're taking hours. You're looking at 4 hours for a 15-minute change trend. So the fact that we've been down for a week and spending nearly 2 days pulling back, isn't it okay that we're willing to give it 3 to 4 hours to change trend on us, to give us enough confirmation to short it? I think it is. Remember, there's a lot more people buying right now than selling. We need to get sellers on board, okay? Let's go to a 15-minute chart and just think about, just draw some other stuff. Let's say it starts rolling over from here, which would be this would be a perfect time to see this start changing trend. Why would that be? This would be a perfect time to start seeing this on this pair. This 15 minutes swinging up, a higher low, lower high, lower low, something like that. And that would be our trade, where I'm putting this red arrow. But why would we like to start seeing that now? Exactly. Thank you, Jeff. Time of day, we are 4 hours, just under 4 hours away from London Open, and it's going to be a perfect resistance zone. It's also that $1.03 psych level. It's the weekly central. It's resistance on a 4-hour move fib, so daily swing, if you like. And so if we start seeing more selling coming into the market, it's a good time to start seeing people selling now. Okay? So, going back to confirmation, this is a 15-minute chart here. Okay? Personally, I like price action. Like exactly what I'm drawing up on here. Let me show you. Has anyone seen this before? But I like looking for confirmation through changes of trend patterns. So changes from uptrend to downtrend is on the left. So that's from changes from up to downtrend, and changes from downtrends to uptrends I like on the right-hand side. And these are the main patterns that I would look for using price action. Okay, so that's examples of using price action for confirmation. Now, the thing I like about it is how in the examples I was asking about, we're waiting for a pattern like one of these 3 patterns here, right? For a long on a 3-minute change of trend. So we'd be waiting for one of those patterns on a 3-minute change of trend for the long on that Aussie. On the short side, on that 15-minute change of trend, we're looking for one of these. Okay, so that's examples of using confirmation, using price action for confirmation. Okay, the long I showed you, an example, waiting for the same pattern but using a 3-minute change of trend. The short on that Aussie using a 15-minute change of trend. Okay, now I asked before what people are using for counter trend. No, not necessarily, because shorting the Aussie today, okay, is going to be counter trend. If you're thinking I'm really going to nail some pips this week, and the Aussie's the monster I'm going to do it on, okay. If you think the Aussie's doing this week, very possible. Who knows? Could be wrong. Could be right. You're going to be counter trend for the first big chunk of today, at least, even the whole day. So I'm actually waiting for a 15-minute change of trend up here to confirm that. But if you like the long, you're waiting for that 3-minute change of trend with the current market. Okay? Good. Okay, so that's all good. Waiting for our that's using price action. I like price action. I mean, that's what I've done a lot of my testing on. I have tested oscillators. Yes, you can, Chris. You could actually long look for a double top or something, get out of it, like long and make 30, 40 pips, get out of it, and then line up a short and make 150. You know, that would work if you're going to be around in front of the charts all day. Okay, so I mentioned I personally like price action. Now, but there's a lot of other things. For example, you might want to use stochastics. Okay? I mean, there's pros and cons of all, like anything else in trading, there's pros and cons for all tools we use. There's no perfect combination or methods or anything. Otherwise, we would find out about it and we'd all trade it and we'd all be trillionaires. Okay? So we need to understand that. And sometimes some oscillators will work better than others. If we just go back to what we were lining up on our, where's my, whoop. If I just put an oscillator on this chart here, real quick, and we'll make it a 3-minute chart. I thought, 3 to 5 minute chart probably doesn't really matter. As long as you're using something, I think is important. Okay, we were looking at this as our zone for entry, potentially, somewhere down here. Okay? If you get, if price gets down here, and your oscillator, in this case, if we'll just use the stochastic, if it comes down in your oversold zone in this case and crosses up, bang, you're taking the trade. Okay? Every time a coconut, price action is not going to have confirmed that. Okay, price action's still going to be looking like this. And that's so using some oscillators, what I'm saying, can be a little more aggressive than waiting for price. Okay? So you just need to understand that the more depending on the oscillator used, like Stokes can be quite aggressive. CCI as well. MACD maybe not quite as much. It sometimes depends on the time frame you're using. But an oscillator will always be a little more aggressive than using price. Okay? So you just need to be aware of that. But it's still, I think, important to use something. Okay, so if you like the long somewhere here, you pick your choice, you pick your place. If it longs and your confirmation happens with your oscillator, bang. That's your trigger. That's how you pull the trigger to get into the trade. The confirmation's the tool, okay? Now, one very important point that's going to help you stay out of some trades, I hope, for the more novice traders amongst us, that I've been mentioning. The stochastic is 8, 5, and 3. There you go, Sophie. So it's so if I go back to the Aussie dollar on the we'll just use the hourly chart. We're at a 618. We're at around a weekly central and roll reversal area and major psych level. In other words, we're at what? Right. So, major resistance. Major. So, that being said, now it's time to wait for our confirmation, isn't it? So what am I getting at? Well, we don't just take any change of trend if you're using price action. We just don't take any change in oscillator. We wait for we do our analysis, we build our trade plan, we pick the zone where we want to short it from, i.e., as George says, confluence of areas, and then you wait for your confirmation. And that's a very important point because, don't fall into the trap that I did when I was a very novice trader. When someone was showing me MACDs and stochastics and all that sort of stuff, I would go off and take every cross known to man. I would be looking, if this was a 1 minute chart or 5 minute chart, I'd be trading short off that one, long off that one, long again there, short over here. No. They are your triggers to get in, but you need to have your trade plan fall into the zone that you want to trade it from. Okay, very important. It's going to keep you out of a lot of losses. So first is you do your analysis and you decide on where you want to long or short. And then once you've decided that area, you wait for your confirmation to get in. Okay, very important, guys. I've waited for this. We discussed this in boot camp all this week, that's the zone we want to short this from. And now it's there, so now we've got our zone. Now we need to wait for our confirmation. Sophie, that's a good question. Pending orders. If you're living in where I live in West Coast America, which has the worst trading hours on the planet, and you're looking at that, you might be looking at it saying, man, I need to be part of that because I think it's doing that today, and I'm going to cry in the corner all day if I wake up in the morning and it's done that. So what you might want to do is you might consider in a zone where you think it's going to get short, you might decide to, if you're a few pips away from it and you cannot wait for the confirmation, you might decide to put a pending order up there and say, you know what, I'm going to put an order at $1.03 and I'll put a 50 pip stop on it. You might have to lower your lot size a little bit. I'm going to put a 50 pip stop on it and I'm going to go to bed. Correct, Jack. I do a lot of my trade planning and stuff off a chart like this. But then when I've decided where my zone is and when I'm there, I'm switching to the 15-minute chart over here for the 15-minute confirmations or the 3-minute chart over here for the 3-minute confirmation. Perry, 80-20 is what we use in boot camp, but if you want to play with a 75-25 or something, that's totally up to you. That's confirmations, guys. It's the personal, we joke about this in boot camp a little. It's the sort of personal little area that each individual has to just sort out for themselves. They're, if you're a lady going out on the town for the night, some prefer to take a handbag, some take some little pursy looking thing, and some women plan on guys buying them drinks all night and they don't take a thing. It's a personal judgment that you just need to feel comfortable with. Yeah, the only way to avoid, Sophie, that is to have someone get a robot that will do it for you, automate it. George, divergence on the Stokes, i.e., I just mentioned on the pending orders, pending orders are going to work if you don't have time to wait for the confirmation. But once again, you got to test it, right? So this is what George is asking, and it's actually an example right here. Okay, is price on this Aussie 3-minute chart is heading up. Okay, but stochastics is printing these lower crosses. So that can be viewed as stochastic divergence. So George is asking, isn't that an indicator that things are going to roll over? Is that what you're asking, George? It's not a confirmation in my mind, but it's another indication that things are going to roll over. Martin, is this the second good bit of advice you've given me today? No, there's something in class. Well, this is not a better example, Martin, because it actually hasn't turned over yet. This is not stochastic divergence because that has not actually rolled over yet. I mean, if it rolls over here, yes, because that is going to be down and the price is essentially going up. But it's potential. I actually prefer this one. Okay. Perry, I don't actually, basically the trigger is to get you in. Now, if you're in a trending market like this, you've got I know, Boyke, we got we're getting your test messages. You're going to have to wait for the recording, I think. So, Stokes cross, pullback, long side, any pullback sort of giving you Stokes crosses. In a trending market, they can work as well. But I don't really get caught up in they work well in sideways markets or trending. I mean, they're using the tool to enter a trade to pull the trigger. And, it's one of those things that if it doesn't work, you just have to line it up again. See, what you'll see is you'll see something like this, Harry, where you will take a trade like this, where it comes down, you think, oh, this is going to go long, the Stokes crosses, and gives you a false message. Right? But then again, later on, at the next level of support, it crosses again and gives you exactly what you wanted. Right? So, basically, like anything, if you're using it for confirmation, you buy it in the areas of support that you wanted. And off you go. Now, it's in these sorts of little areas here. If I fib this rise, see, we come back to a 382 in here, and that fails. And then we come down to a 618, and that works. And sometimes, this is what I was discussing in a webinar prior to Christmas, is sometimes you need a couple of trade plans to get you into the direction that you want, because you always got to be prepared for the one that fails, like this one here, number 1. And then, trust your direction, and number 2 kicks in and works. And if you're looking at, and this is the whole, one of the big things with confirmation, right? Is if you use stochastics, this is an example, but it could be RSI or CCI or whatever. If you see a cross and it fails, and then it gives you maybe another cross down here at a lower price, you might take it. As long as it's at support in an area you'd be happy trading. Okay? I see the same thing with price action all the time, where it will do this. Price comes down, and then gets long, and I go, great, pull back. Okay, there's my trade long in yellow. Great, awesome, off we go. And then price in red does this. Hello. And my stop, which was here, the dotted line, gets taken. And then price does this. and goes off for the rest of the day. And so it's the same sort of things I was showing you with the Stokes. Price does exactly the same thing, and then you just have to line up another trade plan over here. Trust your direction, and it confirmed to you again. We just didn't quite have our timing right down here. Timing was slightly off, but it's all valid, right? So that's what you have to be looking for. Now, I'm no oscillator fan because you know what's really worse, Hulk, is when you have direction for the day and you don't manage to get into it, and you pick a zone, you even take a loss or a break even, and then it goes a couple hundred pips in your direction. That's what irks me. Yes. Anyway, guys, that's the end of our webinar for today, this week. Time flew. Anything you want discussed in future ones from next week, please pop me an email to, hello David L. Merry Christmas, Happy New Year. Email me at robert@fxbootcamp.com, and we'll get it out there for you. Okay? Have yourselves a good rest of your day, guys. And take it easy and good luck. Cheers.